Today, we're going to crack open the engine room of the Indian economy. We're going to explore the two powerful and really different forces that shape everything from huge infrastructure projects right down to your own personal savings. All right, let's dive in.
So, have you ever stopped to think, where does all that money actually come from? It's not magic, right? It all flows through this massive interconnected system. And honestly, understanding the system is the key to understanding the whole economy. And here it is, the engine itself, the Indian financial system. Now, it's a super complex machine full of institutions, instruments, and services, all working together. But for today, we're going to zoom in on one absolutely critical part: the financial markets. This is where the real action happens. Think of these financial markets as two totally different worlds, each running on its own clock. You've got the fast-paced money market, that's all about the here and now, the short game. And then there's the forward-looking capital market, which is completely focused on the long game, on building the future. So let's start with the short game. We're jumping into the money market, a place that's all about speed, liquidity, and the immediate financial needs of the country. So what is the money market exactly? Well, it's where the big players, banks, corporations, the government, go for short-term cash, usually for less than a year. Think of it as the financial system's central hub for managing daily cash flow. It keeps the whole economy liquid and running smoothly day to day.
And what's wild is that the money market is basically split right down the middle. You've got the formal, organized sector with the big dogs like the Reserve Bank of India and all the commercial banks. And then you have the informal, unorganized sector with indigenous bankers and moneylenders. It's this fascinating duality right at the heart of India's finances.
And sitting at the very top of that organized sector is the Reserve Bank of India, the RBI. This quote from Professor Shah just nails its incredible power. It is the ultimate controller of money and credit in the entire country, period. I mean, the RBI is a true powerhouse, juggling so many critical roles. It's the only one that can actually print our currency. It acts as the government's banker. It's also the banker for all the other banks, kind of like a lender of last resort if there's a crisis. It guards the country's foreign currency reserves, and this is the big one: it controls the flow of credit, which directly impacts the interest rates we all pay. Okay, let's switch gears and move to our second world. We're shifting from the short game to the long game, the capital market. This image here really gets to the heart of it. If the money market is all about keeping the engine oiled and running day to day, the capital market is about upgrading that engine for the long haul. It's where the big, long-term funds are raised to build factories, develop infrastructure, and fuel real, lasting innovation. The key phrase here is long-term funds. We're talking about things like stocks and bonds. The capital market is the essential bridge that connects your savings, whether they're in a bank or a mutual fund, directly to companies and governments that need that money for huge, long-term projects. And its structure is this whole diverse ecosystem. You have the super safe market for government bonds, the more dynamic and exciting market for company stocks, and these powerful financial institutions that basically provide the muscle for industrial growth. It's a really cool mix of stability and risk. So let's break that down real quick. The government securities market is where the government borrows money by selling bonds. It's considered so safe, they call it the gilt-edged market. The industrial securities market is what most of us just call the stock market. And those development financial institutions, they're basically specialized banks that focus on pumping money into major industrial expansion. But neither of these markets is perfect, not by a long shot. Like any powerful engine, they've had their share of serious problems over the years and have needed some major reforms to keep them running efficiently and fairly. The money market, for example, has faced some massive challenges. That dual structure created huge inconsistencies. There were constant fund shortages, these wild, unpredictable seasonal swings in demand, and a huge lack of access for people in rural areas. The system was just constantly under strain. So to fix this, a whole wave of reforms brought in new, more flexible financial tools. The RBI also created something called the Liquidity Adjustment Facility, which is a crucial way for banks to borrow or park funds overnight, smoothing out those daily cash crunches. And then came the real game changers, electronic transfers like NEFT and RTGS. They completely revolutionized the system's speed and efficiency. It was a total upgrade. Now, the capital market had a different kind of problem, a massive trust problem. You had high-profile financial scams, you had insider trading and price manipulation. It was all eroding public confidence. It just didn't have the transparency of more developed markets, and that was holding the whole country back.
The solution was a complete overhaul. The creation of SEBI back in 1992 was a huge turning point. It established a powerful watchdog with real teeth to protect investors. Trading moved from those chaotic, yelling crowds on trading floors to quiet, computerized screens. And demat accounts made holding shares electronic, which made trading faster and also got rid of huge problems like fake certificates. It was basically a new era of trust for the capital market.
So, we've got these two really complex markets, each with its own rules, its own players, its own history. But why does any of this actually matter to you? How does all this high finance connect to your daily life? Well, the money market's short-term interest rates, which are heavily influenced by the RBI, directly impact what you pay on your loans. You know that variable interest rate on your car loan or your credit card? Yep, its roots are right here, in the daily churn of the money market. And the capital market, that has an even bigger impact on your future. The performance of the stock and bond markets directly determines the value of your long-term investments, your mutual funds, your pension, your retirement savings. Its health is literally tied to your future wealth. So in the end, we see these two really distinct worlds, one operating in minutes and days, focused on what's needed right now, and the other operating in years and decades, focused on future growth. But they aren't separate at all. They're two sides of the same coin, a powerful, interconnected system that quietly shapes your financial reality every single day.
This is the engine that's powering our economy. It's fueling startups, building cities, and funding innovation. So the big question is, what do you think it's going to power next? Thanks for tuning in.